On Nova, one man's quest to experience the undersea world like never before.
Submarine built on fascination. About 99,000 people have said I'm crazy.
But in the ocean, pushing technology to the limit can be dangerous.
It's getting critical. One can only hope that I have thought it out correctly.
Okay, we're on the bottom. I'm getting an alarm signal. I've got some water coming in.
Adventures of the underwater dream machine.
Join us tonight at 11 here on OPB.
Who will answer our great-grandchildren's great big questions? OPB will be there. Thanks to the generosity of our donors who support the Campaign for the Future. To all our supporters, our thanks. And remember, the future of OPB is in your hands.
Funding for local broadcast of Nightly Business Report has been provided by viewers like you and by the following.
Key Bank, supporting Key for Women, offering customized financial insights and solutions to help women entrepreneurs achieve their business goals.
Conklin, Fiscum, and McCormick's Me to You Marketing, providing word-of-mouth marketing services to build, sustain, and measure consumer conversations about your products and services.
American consumers are feeling pretty upbeat these days with good jobs, low gas prices, and a soaring stock market. Consumer confidence in December hits its highest level since the spring. That's just one of two positive reports on the economy today. We'll have details.
After an unsuccessful run for Vice President, John Edwards takes aim at the top job. Edward makes his bid for the presidency official today. We'll get some analysis on what he might try to accomplish when it comes to the American economy.
So, where's the beef? Or more specifically, where's the beef from? That question gets discounted by government regulators who say it doesn't matter if the cow was cloned or not. The beef is healthy to eat. Not everyone agrees.
And speaking of health, in my Bill of Health report tonight, hospitals are places that are supposed to help people get well, but more and more hospitals are getting people sick. We'll explain.
I'm Susie Garrow.
And I'm Jeff Yasteen. Paul Kangas is off tonight. This is Nightly Business Report for Thursday, December 28th.
Nightly Business Report is made possible by
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments. Gain from our perspective.
And by A.G. Edwards.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. New economic reports today showed surprising strength in consumer spending in the housing market. That weighed down stocks as investors became concerned that the Federal Reserve will not cut interest rates early on in the new year. The Conference Board said today its consumer confidence index rose much higher than expected to 109 in December. That's up almost 4 points from November's reading and the highest level since April. The numbers are based on a survey of 5,000 U.S. households, and they're closely watched because consumer confidence often predicts spending trends. Meanwhile, sales of existing homes also rose more than economists had expected, up 0.6% in November. That follows a 0.5% increase in October and marks the first back-to-back monthly sales gains in almost 2 years. But while sales are going up, prices are coming down. The numbers from the National Association of Realtors also showed the median price for an existing home fell to $218,000 last month. That's down more than 3% from the same month a year ago. Economist Beth Ann Bovino of Standard & Poor's says that trend to lower prices should help boost existing home sales next year.
What we think will be driving the increase in home sales is going to be lower prices. Homeowners are going to have to capitulate in what they expect their homes are worth. Lower it somewhat, and that'll actually drive the home sales through.
Bovino says she believes that the worst of the housing slump is over, but she says the housing market will not rebound until inventories of unsold homes fall sharply.
And oil prices headed higher on the New York Mercantile Exchange today. Light sweet crude for February delivery rose 19 cents to $60.53 a barrel as new figures showed U.S. crude stockpiles fell sharply last week. The Energy Information Administration says commercial crude oil inventories dropped by a whopping 8.1 million barrels in the week ending last Friday. This marks the fifth week in a row that crude inventories have shrunk. But analysts admit things were made worse by weather-related delays in offloading imported oil at ports along the Gulf Coast. Experts say there should be a big reversal for crude in next week's numbers since those delays are now clearing up. Meanwhile, a bigger question for the energy markets tonight does not involve next week, it involves next year. Experts are split over just where oil prices will be heading in 2007. As Erica Miller reports, there are a lot of factors that could figure into the equation.
For many motorists, the pain of $3 gallon gasoline has not been forgotten. Now some experts are warning of an even higher tab next year on the back of record crude prices. Goldman Sachs and others predict crude will average at least $72 a barrel in 2007. The reason? Strong global demand for oil, particularly from China. The bulls also think OPEC will be successful at cutting output to prop up prices. The cartel plans to take 500,000 barrels a day off the market starting in February. And there's the possibility of more cuts beyond that. But other industry experts, like oil trader Bill Wallace of Man Financial, think crude prices will fall next year.
I'd see us closer to high 50s, low 60s than I would back up toward those highs in the high 70s.
Analyst Mike Rothman of ISI agrees. He predicts the price of retail gasoline could average below $2 a gallon nationwide next year. Unless there's a major supply shock, he expects more crude will be on the market.
We are going to see next year get back to something more normal, where spare capacity problems should dissipate, where growth in both OPEC and non-OPEC supply capacity will create a larger cushion and help these concerns about availability dissipate.
Rothman isn't worried about OPEC's production cuts. The cartel's member countries notoriously cheat, so it's not clear how much oil will actually come off the market. But nearly everyone agrees there are a few wild cards which make predicting the price of oil difficult.
If you look at 07, the big concern, number one concern that certainly we have is Iraq. Iraq's exporting about 1.6 million barrels a day. If that number goes to zero, you're back in the same foot race of having adequate spare capacity.
To a lesser degree, analysts are also worried about potential supply disruptions from Nigeria and Venezuela. Another wild card is weather. Will it be brutally cold in the northern hemisphere this winter, sapping energy supplies? And come hurricane season, will there be another devastating storm like Katrina, which damages Gulf Coast oil facilities? The price of oil could be a significant factor shaping the economy in 2007. Lower energy prices typically stimulate economic growth, while a return to record highs likely would revive fears of inflation, perhaps even recession. Erica Miller, Nightly Business Report, New York.
And little movement in the stock market today as traders began making an early exit for the New Year holiday. The Dow edged lower through the first half of the session after a spike in interest rates took the wind out of the financial stocks. At midday, the Dow was off about 30 points. That brought out some buying interest and helped push stocks off their lows. The Dow briefly set a new intraday record high, but then ended down a little over 9 points, 9.05 at 12,501.52. The Nasdaq losing 5.65 points to 2425.57, and the S&P 500 closing down 2.11 to end at 1424.73. And bond prices fell sharply as that generally stronger economic data quashed any last hopes for an early 2007 rate cut by the Federal Reserve. The 10-year note falling 8/30 seconds to 99 and 17/30 seconds, and the yield at 4.69%.
Some food for thought today from the Food and Drug Administration. The agency declared food derived from cloned animals to be safe. And the FDA is moving towards letting cloned animal products be sold on store shelves without any kind of special labeling. As Stephanie Du explains, it's a controversial decision that both consumers and the food industry are weighing in on.
The Food and Drug Administration says meat and milk from cattle, pigs, and goat clones are safe to eat. So the agency says it's unlikely it will require foods from cloned animals to be specifically labeled. But that decision is still pending. Critics of cloning, including Margaret Mellon of the Union of Concerned Scientists, say the FDA should require further studies.
While I do think that there are unlikely to be direct food safety implications from the consumption of the products of cloned animals and their progeny, I'm not as sure as I'd like to be.
There are very few cloned animals in the U.S. now. Out of a herd of 9 million cows, only 150 are cloned. The biotechnology industry says cloning is a tool to make copies of the best animals, like the fattest pig or the best producing milk cow. Barbara Glenn of Bio says labeling isn't necessary since there's no health or safety issue from cloning.
We're not changing any genes or moving or deleting or inhibiting any genes in these animals. We're simply creating a genetic twin. And therefore, they're not what we would call biotech animals. They're not genetically engineered. They're not transgenic animals.
Surveys show nearly 2/3 of Americans are uncomfortable with the idea of cloning animals for food and milk. And that's a key concern for companies that sell meat and dairy products. The dairy industry worries that sales of milk and cheese could dip by 15% if products from cloned animals are allowed onto the market. Susan Rulin represents the Dairy Foods Association.
We are watching very carefully what consumers are saying about this, what dairy farmers are saying about this, whether or not the pros and cons measure out that you would want to pursue this technology.
Cloned foods won't be hitting the store shelves right away. The public has 90 days to comment on the FDA decision. But Mellon predicts consumers will bypass the FDA and go right to food suppliers.
They're going to go to the producers of meat and milk in this country and ask them to take steps to make sure that the progeny of cloned animals are not in the food supply, or that if they are, they're labeled.
Cloning an animal can cost more than $20,000. With those economics, experts predict only a select few will be cloned. But once those animals enter the food supply, it will be difficult to identify them from the rest. Stephanie Du, Nightly Business Report, Washington.
Former Senator John Edwards is giving the Democratic presidential nomination a second try. Today, John Kerry's former running mate formally kicked off his bid for the 2008 race from New Orleans' Lower Ninth Ward. Edwards promises a campaign that will focus on poverty and inequality in America. Even though the Iraq War dominated this year's midterm elections, many Democrats believe their populist approach to economics was an important factor. Tom Gallagher of ISI Group says Edwards will put that theory to the test in the presidential primaries.
He's the one most closely identified with populist economics. And so to the extent that he does well, it's a sign that that issue is probably going to resonate more broadly among politicians, and you'll see more of a swing toward a more active role for government and the economy, trying to promote things like the incomes and wages of working class Americans.
But Edwards' moment in the spotlight may be short-lived. The political buzz for the Democratic nomination is focused on two high-profile senators, New York's Hillary Clinton, who is widely expected to run, in Illinois, Barack Obama, who is expected to announce early next year whether he'll join the race.
Also in a race tonight, Verizon Communications and telecom companies in Asia. They're working to put together new phone and internet networks after an earthquake snapped two undersea communications cables off Taiwan. Service to millions of people and businesses was knocked out. Verizon will build a multi-route network across the Pacific to keep voice and web service unaffected by problems like the quake. Telecom traffic is now being routed through satellites and other undamaged cables. Another day of bumpy trading for Apple Computer, this time thanks to a report in London's Financial Times. The newspaper says Apple CEO Steve Jobs was given 7.5 million stock options back in 2001, but that the company's board did not approve them. Instead, the FT says records showing that there was board approval were fake, but the story did not say who falsified them. Jobs never exercised the options. He surrendered them instead, so it's doubtful he received any direct benefit. Apple says it has given the Securities and Exchange Commission the results of an internal probe it did on the matter earlier this year. Now, Jeff, we might learn more about all of this tomorrow. That's when Apple is expected to file its latest 10Q report with the Securities and Exchange Commission.
And as you said, Apple stock was in the hot seat again today on the NASDAQ. We'll see it in a moment as we look at our stocks in the news tonight. But first, starting things off, Ford Motor losing 8 cents. It topped the actives with 11.6 million shares changing hands. And then Pfizer losing 8 cents. That's despite a Chinese court ruling that upheld Pfizer's patent on its anti-impotence drug Viagra. The court also imposed fines on 2 Chinese drug makers selling Viagra knockoffs. EMC losing a dime. Citigroup losing 53 cents as bond prices rose sharply. And bond prices fell sharply, and interest rates rose as today's stronger than expected economic reports rattled the bond markets a bit. Then we have GE losing 31 cents, ExxonMobil rising 37 cents, investors there shrugging off the latest oil inventory data. AT&T gaining 8 cents, Time Warner off a dime, Valero Energy losing 40 cents, Verizon gaining 18 cents. JCPenney shares falling 76 cents. The company fired its chief operating officer, Catherine West. Penny's gave no reason for the move, but said CEO Mike Ullman will assume West's duties. And then we have Giant Industries down 80 cents. The company says a fire has temporarily shut down its New Mexico diesel fuel refinery. Shares of L3 Communications rising 36 cents. The company is contesting the loss of a potential $4.6 billion U.S. Army linguistics contract. A Goldman Sachs analyst doubts L3 lost the contract on cost and says it was more likely due to past performance. The broker does not expect the Army to reverse its decision. And then Greenbrier shares adding $1.21. This is a maker of railroad freight cars, and it rebounded after an early earnings warning last week. Then Neighbors Industries falling 30 cents. The company has ended its efforts to buy Moncla companies, but the oil and gas driller says the companies may work together in the future. Stargas Partners down 18 cents. The home heating oil distributor says it will restate earnings going back 2 years because of accounting errors. And then shares of ABN AMRO falling 9 cents, with the bank holding company cutting its North American workforce by 5% next year. That's about 900 jobs. Then NASDAQ, Apple Computer, there's that reaction, down 65 cents. As you heard a moment ago, investors reacting still somewhat negatively to those published reports about Apple CEO Steve Jobs and allegations receiving unauthorized stock options. Google shares falling a little over $5. The stock under profit-taking pressure after several days on the upside. Cisco with a 12-cent gain. Microsoft down a fraction. Research in Motion up 19 cents. Then Intel up 2 pennies. Qualcomm up a bit, and so is Amgen. Oracle gaining a dime. Yahoo, though, losing 39 cents. Benihana shares rising $3.38. The Sanders Morris brokerage upgrading the restaurant chain from buy to strong buy, citing good same-store sales growth and good balance sheet leverage. Then Asia Info Holdings rising $1.25, 19%. The company inking a deal to upgrade China Telecom's business support systems. And then finally, Champion Industries rising $1.86 late yesterday. The commercial printer and maker of office supplies reported fourth quarter earnings of 20 cents a share. That was well up from 6 cents in the year ago period. Most Americans check into hospitals in order to recover from an illness or injury, but a disturbing trend is emerging from the nation's hospitals that could hamper those recoveries. A growing number of staph and other infections. Staph is a killer, and it's tough to stop, especially once it's picked up by hospital patients. In tonight's Bill of Health report, we look at why infections present a problem and an opportunity for administrators and entrepreneurs alike. It's a problem that's all too common for anyone who enters a hospital for treatment, the danger of infection during your stay. The Centers for Disease Control says roughly 1 in 10 hospitalized patients will acquire an infection after being admitted. That's about 1.7 million incidents annually, resulting in the deaths of roughly 99,000 patients each year. Dr. Alan Hartstein is an epidemiologist and professor of clinical medicine at the University of Miami's Miller School of Medicine.
My impression is that it's an increasing concern among the public as well as among providers. Infections do occur. Approximately 5% of all patients who enter a hospital uninfected develop infections during their stay. And most importantly, it's now felt that a large proportion, not all, but a large proportion can potentially be prevented.
Prevented, say experts, through increased hand washing or use of alcohol-based hand rubs by doctors, nurses, and technicians in the course of seeing patients. Some firms have even promoted the use of applied antibacterial sprays like these on floors and other surfaces as yet another way to kill bacteria on contact and reduce the chance of infection during hospital stays. One study conducted among Pennsylvania's hospitals showed just how high medical costs rise because of infections. Dr. Asif Ali is president of AMG Scientific.
They showed, just tracking 300 hospitals, that the impact in that state alone was over $2 billion. And the reason is, in the same study that I'm speaking of, in patients who did not have nosocomial infections, the average hospital cost was around $8,000. Once a patient did have a nosocomial infection in the hospital, that went up fivefold.
Another problem is finding accurate and timely data on infection trends. The CDC maintains a database using information voluntarily reported by hospitals, but in 2005, Pennsylvania and Florida became the first states to begin requiring hospitals to report infection data. Epidemiologists say these databases help show where hospitals can improve, but they also caution that the information by itself can be misleading. The size and mission of the hospital and the health of the community it serves all have an impact on the data.
Tomorrow, our last market monitor of the year is Sam Stovall, Chief Investment Strategist at Standard & Poor's. When it comes to investing, for most people, it pays to be organized, for most people, but not necessarily for tonight's commentator. Here's Myron Kandel, president of the New Hampshire Initiative for Corporate Responsibility and Investor Protection.
It's a time when many people make resolutions for the new year. I've decided to tackle an important business issue facing everyone who works behind a desk, the cluttered desk syndrome. There are no census figures, but there must be millions of Americans whose desks are filled with piles of papers, reports, documents, and other detritus of the modern business scene. I must admit that my own desk is a mess. For most of my 25 years at CNN, it was so cluttered that it became a legendary stop on any tour of the studio. But my colleagues did marvel at how I could dig through a seemingly disorganized pile and find just what I needed. One estimate says office and home organizing products amount to a $6 billion U.S. industry. I know the arguments. A clean desk reflects an orderly mind and good work habits. It saves time and space, etc., etc. And in those rare moments, very rare, when I can't find something I need right away, I may even envy the neatness freaks. But although I respect their right to exist, that feeling quickly passes. I buy the theory that cluttered desks reflect creative minds and individualized thinking. And if we have emotional ties to what we save, that's okay too. So I say, let us be, as long as we don't spill over to your desk. May clutter and neatness coexist in a productive new year for all of us. I'm Myron Kandel.
And recapping today's market action, a snoozer of a session on Wall Street. The Dow falling 9 points. In very light trading, the Nasdaq lost 5. And to learn more about the stories in tonight's broadcast, go to Nightly Business Report on PBS.org.
And finally tonight, the Big Apple has racked up a big year for tourists. The city received a record 44 million visitors this year. The majority of them, about 37 million, came from other places in the U.S. But the falling dollar brought a slew of foreign tourists, 7 million of them, with travelers from Britain leading the way. In fact, more than 1 million foreigners are visiting New York this week alone. The money spent by tourists supported nearly 350,000 jobs in the city and pumped $24 billion into its economy. And Jeff, New York isn't stopping there. The city has set a target of attracting 50 million tourists every year in the next 9 years. So I invite you to come and visit.
Absolutely. They don't call it the greatest city in the world for nothing. That's Nightly Business Report for Thursday, December 28th. I'm Jeff Yasteen. Good night, everyone. Good night to you, Susie.
And good night to you, Jeff. I'm Susie Garib. We'll see all of you again tomorrow night.
Nightly Business Report is made possible by
Is your nest egg in shape for retirement? Objective financial advice can help. A.G. Edwards, for more than 118 years, fully invested in our clients.
Franklin Templeton Investments. After 50 years of worldwide investing, we see market opportunities through the eyes of experience. Franklin Templeton Investments. Gain from our perspective.
This program was made possible by contributions to your PBS